Here we are with a trade review, our daily quick cap on ticker symbol TT, Train Technologies. And this one came up, today's Monday, so that day right there, we'll zoom in just a little bit so you can see it better. That day was our signal day, meaning that was the day that it showed up on our scanners, and we decided to put it on the watch list to watch for the next trading day, which is today, Monday. It is after the market closed. This was a bearish signal, and you can already look ahead and see how well this one worked out, and we'll jump into that in just a minute. So we had a bearish signal popped up on the scanners, and I'll be honest, I really liked this was a river to valley setup for us, and it looked really good in that respect. But it's looking left, and all of this is pretty much irrelevant. Let me zoom in on this area. So there's our signal right there. Looking left for horizontal support, there's really not a ton. And just so you can see it better, let me go over here. I'm going to draw a line right at the top of our signal right there. And you can see that there's a little bit right in here, but it wasn't anything major, or not even major. It wasn't really even minor enough for me to consider. However, I did like how when it got anywhere near this area, instead of it being just a typical supply or typical support or resistance level, it almost looks like a supply and demand zone, meaning it's in a more of a bigger area. It's supply and demand is very similar to support and resistance. However, you would draw it in more of a rectangle, and I saw that and noticed that anytime price got in this general area right here, we did see some sort of reaction. So I took note of that, but it wasn't enough. However, let me go back to the trend line. Then we drew in, let me zoom out just a little bit. All right, I think it was right in, no, okay, I know what I did. All right, so from this point here, coming through here, I was just trying to connect, really I was trying to connect this top over here with this top, and you can kind of see what happened is that it ended up looking pretty good as far as where it was bouncing there. However, that's still very speculative. It's not super easy to see. So I studied this a little bit more, and as I'm looking at this area right here, I can see that price. I mean, there's a trend line in there somewhere. Like you can see these lower wicks. So what I did, I believe the goal here was to see what would happen if I connected the low of this candle and this candle where we have those two wicks. And what ended up happening was that. And you can see how we are right there at it as well. So this is all, truthfully, this was all a bunch of very small, very minor areas of support. However, or excuse me, resistance in this case. And in this situation, just so everybody's clear, this was a broken trend line, and it has come back to retest that broken trend line. And that is a commonly used trading strategy, whether it be trend lines or support and resistance. Just anytime price breaks a key level, when it comes back and retests it for that first time, in this situation, you get short on it. And so it did look like that there was a chance that that's what was happening for this trend line, as well as it bouncing at this trend line, and combined with that little supply and demand area I talked about and the 50 SMA right here. It was a bunch of really small things that gave me enough conviction to put this on the watch list. And I'll be honest, Friday was a tricky day looking at the scanners. We usually have, just so everybody knows, I mean, I'll usually have somewhere between 4 to even 8 stocks that I'm watching the next day. Typically, I try to keep it around 4 or so, and we usually always get triggers. We always get trades out of those. Typically try to, 4 to 6, I would say, is my sweet spot. But I will go as high as 8. Friday, what I put on the watch list, there were only 2. And this was one of them. So that's the technical breakdown as to why I put it on the watch list. I was bearish on it. We've got an overall Long-term downtrend. Yes, we can see there's a little bit of a lower high here from here to here. However, after that little bitty uptrend on the trend line that I drew, and it breaking that and then coming back up, I did feel pretty bearish on it if we could get triggered. Now, to get triggered or for our entry price, what we needed to see was a break of 127.96. And what that means is I needed to see 127.95 print up here. Since there was no gap, we didn't have anything to worry about. Price opened up here, and we just needed to see it break down and needed to see 127.95 get printed. And it did that fairly early. It actually gave you, depending on how you're wanting to trade it, there were quite a few areas of or different times where you could have entered, and I'll draw it in when we step into the 1 minute in just a little bit. But everything that I've gone over up to this point is also gone over in the war room each and every morning, so that members know exactly how to trade. They know why I'm trading it. They know when I'm getting in. Everything, from start to nearly finish, they know exactly what I'm doing and why I'm doing it. The only thing that each individual has to decide is when to exit. And I always go over 3 different exit strategies in these videos. These are not the only exit strategies, but it's enough to give you an idea. I think that exit strategies are something that is grossly overlooked when you look at videos of trade breakdowns on YouTube, simply because traders will have no problem telling you when they exited or whatever, but why? How do you build consistency with that? Is it a feel thing or is it a technical thing? How can you build consistency with your exits? And that's something that you need to take note of. You need to practice and put into practice so that you can become more consistent as a trader. Finding a good exit strategy that you can stick with. It's not going to work every time. Not every exit strategy does, but you got to find one that works for you, that fits your personality and your trading type, and stick with it. So let's look at the first one here. First one would be exiting into previous resistance or support. In this case, we are looking for previous support. And for me, it was right. I'll draw it in. I will delete these lines to avoid confusion in just a little bit. Right there. And you can see right here with this little bitty cup, it hit it basically there, barely broke it there. And then again, this wick, the low right here of this area was right there as well. And then we can see right here after this gap down this day what it came to. So I felt pretty good with that being an area to exit at, if that's how you chose to exit. Now, after that, the next one would have been this low, and then really after that, I would have just said let it ride if it got to there, which it did not. I don't think 125.26 is that low, and 125.79 was the low of today. So it didn't reach there. However, exiting into previous support or resistance is a very viable, it is a trusted, it is a used method of exiting. And that's just giving you some ideas. You can see how I did that. All I did was I looked left and I found areas of support, or the nearest area of support that I could find to my entry that I felt comfortable with. And you don't want it to be too terribly close, but at the same time, you don't want to pick the first obvious one like, here or down here, because it's just too far away. And price could definitely react before it gets there. So it's just looking left, finding area of support and resistance that you want to take profit at. Because you expect price to bounce or to make a move or to react at that level. So I won't go into too much more detail on this. And I do use this method of exiting from time to time. I mean, I haven't used it in a while, to be honest, because this next one is the one that I tend to focus on, and that is simply when price triggers, you enter the trade, you set your stop, which is given in the war room, and it is an exact number. It's not an area. It's not a dollar amount. We use that number to determine our stop loss, which then helps us to determine our position size so that we know exactly how much we're going to lose if a trade goes against us. And if you're a member with Armor Trading Systems at armortrades.com, You can find videos on that in the arsenal, and also it's the video library that I have. So when it triggers, you just simply enter the trade, you set your stop, and you let it ride throughout the day. And you can adjust your stop. You can move it as the day goes on, but it's much more laid back and passive in that you don't have to be watching this all day to trade it all day. Like this one, I did not watch this all day. However, I exited. I'll show you where I exited. It was like 9:55 or something, or not 9:55, 3:55 or something like that. As price hit this low down here or near that low and then started bouncing back up. I'll show you how I traded it in just a second. But with that method of trading, you can catch some really big runners, like the video that I posted today. I posted this one today. This video will be posted tomorrow. The video that I posted today was a Friday's trade, and it was a big runner. It was really nice, a really, really nice trade. And trading like this gives you that opportunity to catch those big runners. You can, however, turn some winners into losers. However, what I found over time is that those big runners outweigh the lower winning percentage. We still have a phenomenal, I'd have to crunch the numbers, see exactly what it's been recently, but or in the past several weeks. But before that, I mean, we were easily above 60% win rate using this trading method. And when we do that and our average winner is bigger than our average loser, you can make some money doing that. Even passively, even just even as a supplemental income, you can make some money doing it this way. That's the way I traded it. So let's look into scalping this on the 1 minute, and I will go ahead and warn you, this was an ugly, ugly chart on the 1 minute. It's gaps, it's full. You can see why. Look at the volume up here. Volume is not great at all. However, on our signal day, it was over 4 million, which is why it popped up on the scanners. It showed up. I have a criteria set for certain volume, and it reached it on that day, but really not really any other day. Anyways, let's jump into this hideous looking 1 minute chart, and voila, you see that is not very fun to look at. This is not a chart that I would give like new traders to recommend them studying, because it's just so choppy, so all over the place. I mean, look at this right here. All right, anyways, what was it? So 127.95 is what we wanted to see print. So 127.96 was our trigger. And it first triggered, where did it first trigger at? Right there. At 10:06, it finally triggered. That would have been the first area to enter at, first chance to enter. And one thing I do want to point out is the way I've choose these triggers, these entry levels, they are very specific. They are done after a lot of research, a lot of testing. So don't be afraid. You see this big downward move. I don't even look at the minute chart. I look solely at the daily chart. But that big downward move could, dissuade some traders from going short. However, you see, if you had gotten short there, when price hit our trigger point, you see what happened. I mean, it was a almost 60-cent drop in 4 minutes from the time that it triggered. 1, 2, 3, 5 minutes, right? Yeah, 5 minutes after it triggered, we had a nearly 60-cent drop. Easy scalp on that one. Nothing much more to say other than it worked beautifully. Worked absolutely beautifully. Now the way we'll show you, just because I said I would, the way I exited was, you see price came down to this low, and then when price got way up here, let's see, it was in this minute, I said 55, it was actually 350, where's that mark at? 354. It was right around 126.37, I think is where, or 100, well, yeah, 126.37, right, and there's where I exited, because I didn't want it to, how end of the day is, I didn't want it to push way up and end up really just annoying me. So I technically exited about 10 cents better than where it closed. But even if you exited there, still a fantastic trade. So that about wraps it up for this video. Thank you for watching. I hope you're able to learn a lot. This was a beautiful trade. I'm happy to have taken part in it. Thank you, Lord, for that. And again, thank you for watching. If you enjoyed this video, please like, share, and subscribe, and God bless.